Today on Fear and Greed, Qantas reports a sharp jump in profit thanks to Jetstar as the government greenlights Qatar's investment in Virgin. Coles outdoes Woolworths when it comes to sales growth, and BP dumps its plans to become green. Plus, a warning from the RBA and Snowy Hydro runs into trouble. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Friday, the 28th of February, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Last day of earnings season. Always a moment to savour. When the market closes 4 p.m. today, that's it. A few stragglers will come out on Monday, but it's over.
You can breathe a sigh of relief then, can't you?
Exactly right.
It's been a heck of a reporting season, and we saved a good one towards the end, really, haven't we? The main story this morning, Qantas has reported a jump in its half-year profit and paid a dividend to shareholders for the first time since COVID. Here we go. Just as Treasurer Jim Chalmers gives the go-ahead to the Virgin-Qatar tie-up. A lot happening in aviation, Sean.
Sure is. Qantas' share price jumped 6% yesterday on the back of increasing confidence that CEO Vanessa Hudson's turnaround plan is working. In fact, there's been a bit of confidence for a while. Qantas' share price is up about 80% over the past year. The highlight of the performance that we heard yesterday was Jetstar. For the 6 months to the end of December, the underlying domestic earnings from Jetstar were up 54%. Now, that was helped by 8 new aircraft, including new Airbus planes. Basically, that expanded Jetstar's capacity. It made more money. We also heard that Project Sunrise, that's the Sydney, Melbourne to London, New York non-stop, still due to start next year. The underlying profit for Qantas was up 11% to about $1.4 billion. The problem, though, at Qantas is the lack of investment over many years in planes. So it's flying a bunch of aging Boeing 737s. And Hudson said there are delays on the delivery of new aircraft. As a result, Qantas will refit more than half its 737s. That means more seats, more legroom, and all important, more overhead locker space. Problem, of course, old planes just cost more to run. They generally have lower capacity. So this is a makeshift solution, but really it is a decade of underinvesting in planes coming back to bite Qantas.
I'm amazed that the Project Sunrise project is on track. It's because it's one of those things that's been talked about for so long, and you always expect that these things will get pushed back a little bit as we get closer. But it has been a big ticket item for Qantas, hasn't it, for some time? And they've really been putting a lot into making sure that they can achieve this. And these are long flights, like 22 hours in the sky.
So the thing that Vanessa Hudson is confident about is demand for those flights, because at the moment there's quite a bit of demand for business class flights. More so, the growth in business class demand is higher than in economy. Mm-hmm. And you would think some of those aircraft will be used by businesses taking 22-hour flights. Cheapos like you and I, we don't mind having a little break in LA or San Francisco or Dallas or somewhere. Maybe Singapore. Yep. But you would imagine business. So I'm hazarding a guess. There's going to be a lot of business class seats on those flights.
Yeah, you would imagine so, because you would want, if you were going to be spending 22 hours in the sky, you would want to be lying flat, right?
You would, yeah.
So Qantas, Sean, is on the up, just as Virgin gets a new 25% stakeholder in Qatar and becomes really a much tougher competitor in the international market.
Ironic timing. I wonder whether Jim Chalmers, the treasurer, did it deliberately.
It does seem awfully coincidental, doesn't it?
Yeah, it's only about an hour between the two announcements. Anyway, Jim Chalmers will allow Qatar to buy 25% of Virgin from private equity owner Bain Capital. That allows Virgin to offer flights to Doha and beyond using Qatar aircraft. What's that mean? Well, much more competition in international flights out of Australia. Winner in that, Michael? Customers.
It's us. Even the cheapos that need to stop off somewhere along the way. Local markets. How did they perform yesterday, Sean?
The S&P ASX 200 closed up 0.3% to 8,268 points. Consumer staples did best. Healthcare stocks, technology stocks, not so good. A bit of corporate news around, as you would imagine, just the highlights. Not an earnings result, but Ramsay Health Care, Australia's largest private hospital operator, its share price jumped 7% after it appointed an investment bank to advise on a potential sale of its controlling stake in a European business. IDP Education, one-time darling of the market, has really struggled on the back of regulatory change over the past year or so. It was down 9% after its earnings tumbled 40%. Not good. Perpetual, the fund manager, its profit fell 65%, triggering a 9% drop in its share price. Medibank Private went the other way, up 10% after lifting its interim profit, and notwithstanding some kind of, problematic views on what's going to happen over the next 12 months. Atlas Arteria, the toll road group, did well, and Neuron Pharmaceuticals rallied 9% after reporting a nearly doubling in sales for its Rett syndrome treatment, Daybue.
Sean, in international markets, it was the biggest profit announcement of the current Wall Street earnings season, Nvidia's result for the 3 months to the end of January. And the world's biggest chip maker, it didn't disappoint.
We were waiting for it to disappoint, but it didn't. For the 3 months to the end of January, so the earnings season is to the end of December on Wall Street. Nvidia has a slightly different calendar, so it's till the end of January. Sales were up 78%. So 3 months to $39.3 billion US dollars. So I'm in my head, what's that? 60 billion Aussie dollars in 3 months. So $20 billion worth of sales of chips, which are actually quite small things, every month. Pretty phenomenal. Basically, there's a rush to build AI infrastructure, and everyone needs chips to do that. Nvidia, it certainly has been, let's say, 2023, 2024, the real stock market powerhouse, though it did come off the boil this year, particularly when DeepSeek out of China was introduced. Its share price has come back somewhat, and in after-hours trading yesterday, it was up 4%. The boss, Jensen Huang, talked about DeepSeek, said it's actually a good thing to have more people in the market. He also said that the big unknown for the company remains the impact of Donald Trump's tariffs. Now, away from stocks, oil prices are trading close to their lowest level this year. That's over concerns about those tariffs. Good news for people buying petrol in the next couple of weeks. One commodity benefiting from all the US stuff is gold. It continues to trade near record highs. Bitcoin keeps going backwards, or at least lower, trading around 85,000 US dollars a unit, and the Aussie dollar is buying just under 63 US cents.
You got to love a boss coming out and saying they welcome competition.
Yes,
right?
Yes.
You always raise an eyebrow at that, don't you, a little bit?
Yeah.
Sean, after the show today, we have an interview coming up with Kylie Green from Reward Gateway, something a little bit different today.
It is. So we thought we'd have a break from earnings because we've had so many of them. So we thought we'd talk about people, real people. Now, what Reward Gateway has done is it's done a very big survey of HR professionals, employees across the country, and found things like people are valuing non-monetary rewards as much as monetary rewards increasingly. And there's a demographic view on that as well. It's the first time ever that we're about to hit a 5-generation kind of group cohorts, 5 cohorts of generations in the workforce. What that means, we talk about productivity. It's a really, really interesting interview.
Yeah, it certainly is. As you say, just about people and about the workforce and about really these changing priorities within the workplace. So definitely worth a listen. Stick around for that one. Also stick around. We've got plenty more to come. We're talking about Coles, just inching ahead of Woolies in sales, BP dumping plans to go green. And Sean, we're going to talk about the price of eggs.
Excellent.
Did you say excellent?
No, I didn't. I corrected myself and did, so I apologise.
That's all right. Missed opportunity. We'll be back in a moment with the rest of the day's business news. Sean, sales growth at Coles is exceeding arch rival Woolworths, though the group's half-year profit fell slightly.
So Coles benefited from the industrial action at Woolies distribution centres late last year. It said it gained about $120 million in sales. That pushed up its pre-tax earnings, though the net profit was down a bit. It was better than expected and the share price was up 3.5%. What's really interesting, sales at Coles was up 3.7% across the business, 4.3% in supermarkets. Woolies in supermarkets were 2.7%. That's a big difference when people are shifting to Coles. Now, the boss of Coles, Leah Weckett, said she understands that it probably might be slightly temporary because Woolies didn't have stock and Coles could shove stuff on their shelves, and people, about 50% of purchases, she said, are based on location. That's why you go to the supermarket, because it's close to you. But still, it's a very good sign for Coles, which is the number 2 supermarket behind Woolies, when their sales growth is so much higher.
Yeah, and I know that people do go to the supermarket closest to them, but it's surely a good experience or a good exercise for Coles in exposing customers to their range and to other things. So
Yes,
yeah, you can
definitely
see they would be looking at hopefully some longer term benefits. The Deputy Governor of the Reserve Bank, Andrew Hauser, yesterday told Senate estimates that if the cash rate held steady at 4.35% for a period, inflation would be too low.
Reserve Bank forecasts show underlying inflation will hit and stick at 2.7% throughout next year, based on market pricing. So the market's priced in 2 or 3 rate cuts. The Reserve Bank said if that's what happens, we reckon we'll get to 2.7%. Hauser said he didn't believe there would be that many rate cuts, 3 or 4. He said he didn't believe there would be that many rate cuts, essentially because the Reserve Bank wants to get underlying inflation lower to 2.5%. He also said that monetary conditions were still tight, i.e. detracting from growth, and that the less aggressive interest rate hikes in Australia in recent years helped ensure extraordinary strong employment outcomes. All that is true. You read between the lines and all that. We've had one interest rate cut from 4.35 to 4.1% for the official rate. There just sounds to be another one coming in coming months.
And just staying in the economics world for a moment, Sean, business investment remains relatively weak, which doesn't augur too well for future economic growth.
No, so there are pockets of very strong investment, think data centres, but mining investment in construction, accommodation, rental and real estate sectors ain't so good. That'll feed into next week's economic growth figures. It looks like during 2024, the economy grew by between about 1 to 1.5%. The fact that businesses aren't investing, though, isn't good for the economic growth outlook.
Interesting result out yesterday. Australia's largest car dealership, Eagers Automotive, jumped 20% after the group said that it had outperformed the market.
And that came despite a 25% slide in profit. Not bad. Billionaire Nick Politis holds a 28% stake in the company. He got richer yesterday. It has 200 showrooms across Australia and New Zealand. Where it's doing really well is it's got a second-hand auto business that delivered a record profit.
And just quickly, Snowy Hydro says it will require changes in the leadership by the main contractor on its troubled $12 billion Snowy 2.0 project after a, quote, serious safety incident that brought underground drilling work to a very sudden halt.
So on Monday, there was a failure of an underground fan which lost part of its blade. It sent shrapnel flying through the air. The Australian Workers' Union said only sheer luck prevented anyone from being injured. Snowy, which is owned by the Commonwealth Government, said that following the incident, it will seek an immediate independent review and audit, according to the Fin Review. It will also require changes to principal contractor Future Generation joint venture leadership on the project. Basically, it wants new people at the top.
Turning to international news now, and global energy giant BP has dumped all promise of shifting to a green energy company, abandoning its 5-year attempt to reinvent itself and going back to what it does best, oil and gas.
The company will boost spending on oil and gas by 20% to around $10 billion a year. It'll cut spending on renewables by about 70%. The chief executive said it was a fundamental reset of BP's strategy. It ditched targets to cut fossil fuel production and develop 50 gigawatts of renewable power. The green strategy was launched by the former CEO, never really won over investors. BP's also going to put up a bunch of assets up for sale, one being Castro, the lubricant arm business.
Yeah.
I didn't realise BP owned them.
No, that is a massive about face, isn't it?
Just for the total, just saying it, we can't get there, not doing it.
Oh, wow. Sean, negotiations to merge Nissan Motor Co. and Honda Motor Co. have collapsed, prompting the resignation of Nissan's CEO following a dismal earnings report.
Makoto Uchida, known months ago, said Nissan will make about $2.5 billion net profit for the year ending March. Yesterday, he said it would be a loss of about $540 million. Nissan's credit rating has been cut to junk status. It had done a tentative deal to merge with Honda, according to Bloomberg, but that's off the shelf now. Nissan and Honda will continue to work with Mitsubishi Motors to collaborate on electric vehicle batteries and software development.
And finally, Sean, there's plenty going on in the USA at a political level, obviously. But around the breakfast table, the discussion is increasingly about the crazy price of eggs. It's about US $8 a dozen. Or in Aussie dollar terms, that's about $1 an egg, isn't it?
We're complaining here. Think of those poor homes in the US. The US Agricultural Department reckons that the price of eggs will jump about 40% this year, so it'll be about $1.40 for one egg. Millions of birds have been killed since December as the outbreak of bird flu hit egg-laying farms across the country, Iowa, California, North Carolina. Like in Australia, supermarkets have limited purchases and restaurants are adding egg surcharges. I don't think I've seen an egg surcharge here yet, but apparently it's quite popular in the US at the moment. The Department of Ag wants to import 70 to 100 million eggs over the next month or two. Now, I don't know how the tariffs will work on that. Does that mean you'd add a 25% tariff on each egg? Don't know. But anyway, 100 million egg imports. There you go.
What a story. And it end up being $1.40 an egg.
So by the end of the year, you had a tariff on that of, let's say, 20%. Be generous. Be so nice. That's another 28 cents. So that's $1.68. Wow, for an egg.
That's a lot of money. All right, There we go. Up next is the Fear and Greed Daily Interview, Kylie Green from Reward Gateway. And as well, stick around, check the playlist at about midday when our latest episode, our bonus podcast of Ask Fear and Greed goes live.
I'm not sure whether it's a bonus episode because it is a great question. You were about to say what the question was. I just don't think we've got the answer though, really.
Yeah, but it's fun listening to you search for the answer live as we're discussing it because I often spring these questions on you and you don't know what's coming, and you generally know the answer. And
this one wasn't my best effort,
but we got to an answer.
We did. We got to an answer. That's true.
It was just a journey. It was a journey to get there. It's a great question from Joe, all about ETFs. So have a listen to that one at about midday today. Thank you very much, Sean.
Thank you, Michael.
It is Friday, the 28th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.